People love to store their money in different buckets, whether it's a collectible, priceless collectible, whether it's cash, whether it's Bitcoin. They always want to be able to put their money somewhere. And at the end of the day, it's important to understand how to build wealth through diversification. And I don't want you to get that confused with diversifying a portfolio. It's really about how to diversify within and amongst different asset classes. And once you begin to own that and really be able to see financial homeostasis, good things will begin to happen, especially when the unexpected comes your way. So if you ever read books or listen to Ray Dalio, he always talks about 18 different asset classes, and he always talks about the importance of diversification. The reason why diversification is important because, hey, listen, there could be a war in Iraq, but business could be booming in America. There could be a third world country that they're doing a lot of different infrastructure, and at the same time, another country's dollar and or currency could be going down the toilet. So if you understand the power of diversification, and you're really not expecting things for things to happen overnight from a success standpoint, and understand balance, time, proper planning, and strategy, that's when you could really begin to take all kinds of different action steps, create a lot of liquidity, and when winter comes, economic winter, and opportunities come your way, because you have so much cash, you could take advantage of opportunities that are really there for you and other people just can't see them because their mind is in a different space. According to the IRS, and double check it, the average millionaire has about 7 different streams of income. Let's get into it right now. If you look at number 1, which is dividend income from stocks owned, that means they get a dividend check every quarter. The second one will be earned income from paychecks. You go to work every day, you're 9 to 5, whatever the case may be, you get your check every 2 weeks or a week. Number 3, rents from rental real estate. Now, let's play with that a little bit, because not only is it an income stream, but there's something really magical about that, because if you think of rental real estate, you actually get 4 different rates of return off of the same dollar. What do I mean? Well, you bought the property because you expected to go higher. That's a potential rate of return. You get to depreciate that asset on your tax return, which means, by the way, you keep more of your earned income. You have a renter paying you rent, so that's cash flow, and then there's a mortgage interest write-off. So those are really 4 different rates of return off the same dollar, and a lot of millionaires rinse and repeat in this place. Number 4, royalties from selling rights to use something they've written or invented, okay? Number 5 will be capital gains from selling appreciated assets. You would prefer long-term, not short-term capital gains in that space. Number 6, profit from businesses that they own. 7, interest from savings, CDs, bonds, or other lending activities. Once you really understand that there's models out there that you could follow, model plus 10%, model plus 10%, if you begin to do that, you yourself can begin to achieve financial freedom and make your way to becoming a millionaire. So check it out. I'm not a fiduciary and I'm not a financial planner, but let's play a little bit. An asset class is a grouping of investments that exhibit similar characteristics and are subject to the same laws and regulations. And check out my man Ray Dalio, the holy grail of investing. According to him, diversifying your asset portfolio in a manner that reduces risk without impacting returns. That's a powerful, powerful statement. And don't take my word for it. Go check him out. Go look it up, because if you could really understand diversification and not take on any additional risk, what begins to happen is your world is shifted and your trajectory change has a much more massive incline versus a decline, especially when winter comes and you really understand the power of diversification. So when we stay in the world of diversification, just think of Ray Dalio again, because this is a real important piece, and get your pen, get your piece of paper, write this down. Asymmetric risk, take a picture, check it out. But very simply, the potential for gains and losses on an investment or trade to be uneven. So basically what he's saying there is you don't have to take additional risk, but could still possibly get a better rate of return if you understand asymmetric risk. So here, check out this visual, because this is important, because we always hear about high risk, high reward, which is up here, low risk, no reward. But when you really understand what Ray's trying to talk about from an asset class diversification model, there's going to be a sweet spot that allows you to take on less risk and get a really healthy return. And that's what this circle is right here. And when you think of asymmetric, because you have so many different diversified assets, some are going to perform well, some may not perform as well, but as a result of that true diversification model, it really allows you to land into the sweet spot right here. All right, so really, folks, this is a real powerful video. And really make sure that you take notes, and if you have to take that and rewind it back and listen to what I said, do it again. But diversification, you need to be aware of alternative investments. You have your traditional investments, which are really, stocks, bonds, mutual funds. By the way, once again, I'm not a fiduciary, nor am I giving investment advice right now, providing world-class education on the different alternatives that are out there. And as we go through this process, you could figure out where it sits and fits in your world. So check it out. Let's get into what private equity is. I myself, I've invested into private equity funds. There's a high level of risk. However, the reward is pretty good. And if you look at that, it's either for institutions and or high net worth individuals. And if you could find one of these opportunities, really do your due diligence, you'd be amazed that sometimes these could be 10 or 20 X's, but keep in mind, it's very risky and I wouldn't bank on it. However, if you have extra money because of proper planning and you found yourself with a little bit more liquidity, these are always something to consider in your overall financial mosaic. So check out number 2, which is hedge funds. And remember, hedge funds are, once again, in the overall planning strategy, if you have an opportunity for a hedge fund, that's awesome. But let me just paint a nightmare scenario so you can really get this into your nervous system. You guys, you gals, you might remember GameStop, right? And Reddit was like all of a sudden promoting a stock, and there was a major institution that was betting it was going to go down, and all of a sudden a bunch of retail ninjas just like yourself out there started buying this stock, right? And it went up so high because the institutions that were shorting it had to buy it back, otherwise they were going to lose all their money, and they did anyway. With that being said, even Robinhood began to prevent you guys from capitalizing on your money. But that's the risk when it comes to hedge funds and when you short a stock. And when you short a stock, you're betting it's going to go down. And the only way you could get your money back is if you buy it back. There was so much downside pressure that all of a sudden people started buying it back, including institutions, and it went through the moon. Hey, listen, if you're part of like an investment group or investment team, or you have a boatload of cash and you're part of a venture capital, well, what these folks do is they like to put money into private startups that they believe could be, and then you hear the word 10X or 20X. And this is, once again, high risk, not your emergency fund money. But keep in mind, once again, part of the overall alternative strategy can really make a difference and maybe pay off a college or two if it's done the right way. So finally, one of the best places to store your money, once again, going through the whole gamut, is real assets. So let me just explain right here, precious metals, gold and silver. When the world breaks down, people run to this for safety. Right? I'm not saying don't buy it, but I wouldn't put the whole bank account into it, but that does have its proper place. If we move over to collectibles, a lot of rich folks out there that take themselves too serious, they may invest in, put money into wine, art, cars. Not to say that stamps aren't a big deal, Pokemon and Pokemon cards, as well as like baseball cards, those things tend to have a lot of value in it. But let's not forget about one other thing, and that's real estate. Whether it's commercial real estate, whether it's rental real estate, that is a real powerful investment, and I spoke about it earlier because you get multiple rates of return off the same dollar. So check out number 5, which is natural resources. Here's 3 of them. You have oil, natural gas, and timber. You don't want to own these things in your backyard. You don't want to have oil barrels in your basement or a bunch of different wood in your backyard. So when you look down the path of master limited partnerships, that's how you can own these natural resources, as well as ETFs and mutual funds without having to store the tangible assets. Once again, tying this into the overall plan, diversification, asymmetrical, everything that we talked about gives you the ability to make money, especially when things are uncertain. So remember, when we're talking about diversification, you have traditional form of diversification, which is basically put money into stocks, bonds, mutual funds, buy term insurance. That's traditional. But the truth is, if you really take a look globally and understand how to diversify within and amongst all different asset classes, and that's what this video is all about. We could show you how to have those conversations, what they look like, and how to position your dollars properly. And at the end of the day, go ahead and click the link below. One of the team members here at Epic will reach out and have this educational phone call with you. Hey, thank you so much for spending some time with me today. If you want to hear some more content, go ahead and hit the subscribe button, ring the bell, and then check out this other video over here.